afternoon. Thank you all for joining us today. I'm very excited that you've joined. You will not be disappointed by today's event. We have an action-packed agenda, so I'm going to get started right away. For questions, please use the comment feature at any point during the session, and we will address any unanswered questions at the end of the session. I'll start by introducing myself. I'm Tiffani Whitmire. I am Ally Home's Senior Director of Mortgage Servicing. I've been with Ally for about 7.5 years and in the mortgage industry for a little over 20 years. I'm pleased to introduce today's panelists. So first we have Brandon Snow, who is Ally Home's Executive Director of Direct-to-Consumer Originations with 10 years of experience with Ally and over 15 in the mortgage industry. Brandon will go over the mortgage basics with us, and he'll share some home buying tips and market trends. Next, we'll have Nelida Melchor, who is a senior financial analyst with over 5 years of experience at Ally and is the National Talent Pillar Lead with the Aliados ERG, which is Ally's Latino Employee Resource Group. Nelida will share her first-time home buying experience with us. And lastly, we'll have Alexis Casa, who is an actuarial analyst here at Ally, and he was the 2020 iHeartRadio Corazon Latino Award recipient, honored by the Ally Media team and CEO of ALPFA. Alexis has not yet purchased his first home, and he will share his experience regarding his contemplation and considerations for future home ownership. So with that, I will hand it over to Brandon to kick us off.
Thanks, Tiffani, and a couple of extra thanks as well, both to the Aliados teammates that facilitated us being here today, and then obviously want to thank ALPFA, the team behind the scenes, as well as everyone that's joined. It's a little strange not being able to see you, but like Tiffani said, we're going to start with just a couple of very interesting kind of what's happening in the real estate and mortgage market with some specificity to the Hispanic homeowner. And then we'll quickly move into kind of what you should be thinking about as you consider the possibility that you may buy your first home at some point in the future. Again, excited to go through this with you guys. One thing that I noticed very quickly as we were putting kind of this presentation together is there is an immense amount of focus and research on the Hispanic homeowner, the future homeowner, and really kind of what folks expect that homeowner will do to support broader homeownership in the United States. So we kind of wanted to ground everyone in the trend. So you'll see that really over the last half a decade or so, that trend line has been overwhelmingly positive. Homeownership percentage in 2021 in terms of Hispanic homeowners reached just under 49%. You can see in the sort of late to mid 2000s, that number dipped, from 46.9 down around 45%. That is consistent with the broad homeownership rate in the U.S. So it wasn't just specific to the Hispanic homeowner. There was a lot of stuff happening kind of structurally in the real estate and housing sector in that 2010 to 2015 range as the country was kind of exiting the financial crisis, the Great Recession. Housing was obviously very weak in terms of the effects those things had on the housing market. And so you did see, generally speaking, a downward trend in home ownership in those years. And then you've kind of seen everything rebound from there over the last half a decade or so. Just for context, our white non-Hispanic homeownership rate in the U.S. is just under 75%, and our Black rate is just under 45%. So on average, about 65% of Americans own homes. That number got as high as 70% in the early 2000s, again, before the Great Recession. Moving on to demographics, and obviously one of the things I mentioned to start was we really expect the Hispanic homeowner to prop up net new home ownership over the next 2 decades. The reason for that, and I'm sure you guys probably are overtly aware of this, is the Hispanic generational profile leans young. It's much younger than all of the other groups represented here. You can see those bars to the left in kind of that 25 to sort of 20% range for both Gen Z, post-Gen Z, as well as millennials, which means that Hispanics are in kind of like what we would call on average that those prime, home foundational years. likely to be of the median age to purchase their first home. That number's around 33 years old. And really will just kind of be getting that household formational process. And so we expect that to be sort of a very big springboard into home ownership if trends kind of, distribute normally over time. So we expect that 70% of net new home ownership over the next 20 years will come from the Hispanic population. So we expect other groups to sort of be mostly flat, meaning as folks sell out of their last home, an equal amount of people will buy. We expect, again, the majority of growth to come from the Hispanic homeowner, the future homeowner. You can see there that purple is really the only line graphically that is widening at a decent amount. And again, expect 1 in 5 households by 2040, according to the Urban Institute, to be Hispanic households. And so really will support broad home ownership, real estate, et cetera, over the next 20 years or so. Everyone's favorite. So we're switching gears a little bit from some of the generational and home ownership rate stuff to just like, where's the housing market today? So everyone's favorite topic, interest rates. You can see the raw kind of shape of that line in 2021 and 2022 has been something that I am sure most of you have seen in whatever medium you consume news in. It's been a hot topic, arguably the hottest topic in kind of banking and finance and personal finance in 2022. We started 2022 with a mortgage interest rate that was probably somewhere in the context of the low 3% range. That number got even into the 2s on average for a small portion of 2020 and 2021. We finished 2022 somewhere in the range of somewhere between 6.5% and 7%, depending on the scenario and just the lender that you potentially were looking at rates. So a really big move up, arguably the biggest move up we've ever seen in kind of the housing sector in a 12-month period. I'd say a couple things. We definitely expect that to moderate in 2023. Almost every industry forecast has rates moving back down into the low to mid 5s by the end of this year, with the potential to move kind of maybe back into the 4s in the year 2024. I'd also say if you stretch this graph out over a very long period of time, we're still nominally at relatively low interest rates. If you go back into the 1970s, 1980s, our parents and grandparents were faced with mortgage interest rates that are in the double digits, in the teens, even 17, 18% at their highs. So again, it's all about timing context in terms of how to feel about this. It has certainly made home ownership in this period of time more challenging. Affordability is a huge factor. On the next slide, we'll look at the pace of home price appreciation. But when you couple rates and home prices, it is absolutely more expensive, substantially more expensive than it was 12 to 18 months ago to buy a home. Kind of double bad news if you were in the market to buy and or in the rental market is rents are moving up too. So home prices over the last 2-ish years have moved up faster than rents, but rents certainly are on a torrid pace as well. And that's just obviously made affordability across the board when you couple that with what we're all feeling from an inflationary standpoint challenging. And so we've seen relatively weak demand over the past 12 months in terms of home ownership. And we expect that to normalize. Prices are already normalizing. Rates are already normalizing a little bit. And those two things will sort of converge at some point, likely in the latter part of 2023. And we'll kind of reset the baseline for how much it costs to buy and or rent a home. And we certainly expect it to be better year over year than it was in 2022. And this is this is always a fun kind of hotly debated topic as well. Is it cheaper to buy or rent? I would say that, the rent versus buy decision is a deeply personal one. Most people that we survey, that anyone surveys in terms of why they buy homes, they typically do not do it as a math exercise. It is one of the few things we all kind of generally on average consider to be like a bucket list thing we'd like to accomplish at some point in our life. And typically, even when the math tips towards it's cheaper to rent than buy, a lot of us will still elect to buy because it is a long-term commitment that in theory Provide some predictability in your monthly budget. So obviously, once you've acquired a home, assuming you don't refinance your transaction and change your interest rate, you kind of know what your monthly payment's going to be every month, and that allows you to kind of build a budget around that idea. Whereas if you're renting, you realize that could move around over time as leases change, as you move, apartments or condos or homes. And then on average, home prices over a long period of time typically appreciate 3 to 5% annually. So there is a mild return on investment relative to renting, where you're theoretically maybe paying someone else's mortgage, or that rental income is going to an apartment complex, et cetera, but you're not necessarily, taking that money and kind of putting it to work, if you will. I will say right now, if I kind of had to answer the question, it is likely more expensive today to buy than to rent. That really is a factor of everything I mentioned on the previous couple of pages, just kind of that crash between rates and home prices that again, we do expect that to kind of normalize and likely will make the rent versus buy decision much murkier for those of you that are working through it, but will be favorable if you want to buy. So we'll pivot real quick and talk just a little bit about, home buying basics. And this maybe is an obvious slide, but we don't want to be presumptive. So what is a residential mortgage? The advent of the 30-year mortgage rate 50, 60, 70 years ago really changed the home ownership rate in the United States permanently and in a massive way. So home ownership before the 30-year mortgage was a very low percentage of Americans owned homes. A mortgage is at its core a loan you take out where the house you're buying is kind of collateral for that mortgage. So the same way you would have your car tied to an automobile loan, a mortgage is a home loan tied to the house you acquire, and it's meant to stretch out payments over a long enough amount of time that we all can be a little more comfortable with the idea of home ownership and kind of have a more affordable monthly mortgage payment. Obviously, with a mortgage comes two things that you're paying every month. You're paying the principal balance of the mortgage, so the amount you actually borrowed, and then you're paying interest on top of that that is sort of directed by the terms of your loan and kind of whatever the current interest rate environment is at that moment in time. I'd also like to stress that we really would encourage you guys to be thinking about home ownership, not just as a monthly payment. There are things that come both with the acquisition of the home itself up front, and then there are some ongoing things that we all kind of, would be responsible for as potential homeowners. So down payment we'll get into in a little more detail a couple of slides from now. There's a bit of a misnomer in down payment. Most people just kind of think 20% is the number. There are a lot of flexible down payment options out there for potential homeowners, as low as 3%. There are new programs coming to market every day being supported by a number of different kind of pockets of the government that attempt to kind of lessen that impact of a potential huge down payment and make the monthly payment more affordable. You typically are responsible for some closing costs, 2 to 5% of the home purchase price on average, depending on what part of the country you're buying in. You can negotiate for a portion or all of those costs to be paid by the seller as part of kind of your contractual negotiation once you've selected the home to buy. And then there are a handful of fees kind of included in those closing costs that we've broken out here. So your home appraisal, which kind of estimates the value of the home you're buying. Typically, people would do a home inspection to understand kind of the structural integrity and quality of the home they're acquiring so that they can kind of mentally plan for potential future expenses. Some lenders charge fees as well, just as a cost to originate your transaction. And then you typically put away some homeowners insurance and property taxes in an account so that your lender can help pay those as they come due over the course of a year. So your total payment on average would typically include your principal and interest, which I already mentioned, your property taxes, annual divided by 12, your homeowner's insurance, which is obviously an insurance policy you take out to insure anything that might happen to your home. And then depending on your down payment scenario, you may have to also pay what is called private mortgage insurance, or PMI, which kind of helps the lending real estate community offer lower down payment programs like, 3, 5, 10% as opposed to that 20%. And then depending on the neighborhood you buy in, you may also be responsible for paying some homeowners association dues. That should be part of what you're thinking about as you're looking at different neighborhoods and homes, kind of understanding what those costs are. And certainly that's something a real estate agent can help you with as well. But homeowners association dues, depending on the community and the amenities provided, can be a significant monthly expense that you'll definitely want to be thinking about. And then the other things that weren't on that last page that we just really, I think is super important to stress. You don't buy the home, make the monthly payment, and that's it. So with home ownership, just like with a car, for instance, does come typically some maintenance required and or necessary to just keep the home in good working order, keep you and your family safe, etc. So we've thrown a couple of things up here, but I think the big, 3 to 4, probably heating and air, appliances, plumbing and electrical, and then roofing. And it is certainly why we encourage everyone to do a home inspection so that you can kind of understand the age of your home, the age of these things I mentioned, and then you could kind of mentally map out, okay, I think maybe I'll be looking at an HVAC repair in 5 years, a roof repair in 10 years. And then you can start to kind of plan your approach to, discretionary savings accordingly so that you're not caught, flat footed if these things were to come up at some point in time. Things you should be doing to get prepared. So the top part is kind of just, the neighborhood piece. And obviously we would encourage you to work with a real estate agent, preferably someone that maybe someone who's had an experience with, you can trust them and they can kind of help you navigate the various things you should be thinking about in terms of where you want to live. And there's obviously a massive amount of analytics online now, Redfin, Zillow, Movoto, that can help you kind of understand the dynamics of a neighborhood in terms of walkability, school system, sales activity in that area, what prices have done over a long period of time. Just a lot of good content out there for you to digest as you think about that. And then 6 things that we think are really important that kind of will come up throughout the process that we think you should be thinking about proactively. So knowing your credit would really encourage, if you think you're getting into that 6 to 9 month window of, I think I want to buy a home, in the next 12 months, understand where your credit is and kind of we'll touch on in a couple of slides what lenders would expect in terms of FICO score, but number of opportunities to pull your credit online for free that you could take advantage of. Saving. So obviously we mentioned not just down payment, typically some closing costs. I would encourage you to try to save 2 to 3% more than you expect to put down, so that if you're not able to navigate closing costs to be paid by the seller, you'll have that available to you. And also, if you are, it's great to start out with a little bit of money socked away just as things come up. And when we buy homes, we all want to potentially buy that new couch or buy curtains or buy a new refrigerator. And those things just naturally happen, even if you say you're not going to do that. So it's great to kind of have a little bit of incremental money socked away. Patience. It can be an arduous process. It's a paperwork intensive process. It typically takes about a quarter to a quarter and a half once you kind of start looking to close on the home. And so just patience is encouraged as you navigate what potentially would probably be the biggest financial transaction we'll all make in our lifetime. Shopping your lenders. Again, a lot of great content out there to help you understand where interest rates are, help you understand where different lenders kind of are from their own personal interest rates and what's best for your scenario. Bankrate.com, creditkarma.com, the list goes on. So just understanding whether you're getting a fair deal from the potential lender you want to work with, I think, is a great step. And then a little fun fact that a lot of folks don't know, not necessarily encouraging it per se, but just want you guys to know that it's out there. Very few reasons we're allowed to take early withdrawals from our 401k or IRAs that may be sponsored by our employers. One of those reasons is to potentially take a loan against what you've saved and put away in that to acquire a principal residence. So to buy your first home or buy your second home, as long as it's a home you intend to live in full time. And then you can kind of pay that loan back over time. If you are kind of utilizing an employer-sponsored 401k, they typically have kind of the process you would need to follow and kind of what the schedule of repayment would look like. Would obviously encourage you to think about repayment as part of that broader budget conversation, if you would elect to go that route. Things that lenders will think about that also you should be thinking about as you kind of map out your, what can you afford? What would you want to afford? Assets. So assets is a different way of saying how much money you have saved in the bank. So what do you have in checking? What do you have in savings? What do you have in money market? Certificates of deposit, 401k. Your lender is going to want to be able to document that you can make that down payment from one of those sources. And some sources are more difficult to document than others. So, for instance, if cash is something that you keep on hand at a maybe a higher rate, kind of getting out in front of that, making sure some of that cash makes its way into the bank, has time to season, has time to kind of be present on paper that you could hand to your lender, is something I would encourage. Income, so ability to demonstrate you're getting income consistently, and again, that it's documentable. So if you've got a side hustle or a second job, making sure that you're filing that on your tax returns and that you can exhibit some degree of stability and consistency there. And again, you can kind of provide paper to your potential mortgage lender to document that. Another thing we talk a lot about is the debt to income ratio. So that is gross monthly expenses, which you should think about those as ones that would be present on your credit report: student loans, car loans, bank loans. This is not meant to include things like grocery bills or kind of discretionary expenses. These are like contractual obligations you took out in terms of a loan, divided by your gross monthly income. And that gross monthly income is important. A lot of people think you should be dividing into net, but we as a lending community use gross monthly income. So for instance, that example there, if you had $3,000 in monthly debt and $5,000 in gross monthly income, that would be a debt to income ratio of 60%. A good rule of thumb in terms of what lenders expect is somewhere in that 40% range. There's a little flexibility one way or the other, but 40% is kind of just a good number to keep in the back of your head. Checking your FICO score is something that we previously talked about. Obviously very important. If you could go back just 1 second. There are one more forward, Tiffani. There are a range of kind of products and programs that allow you some flexibility on credit scores. So there are programs that go down to the 580 credit score. The more average programs probably start somewhere in that 600 to 620 range. And then depending on down payment and debt to income may move up or potentially could move lower, just as the lender is assessing overall financial profile. Couple of ways that you can kind of get pre-qualified or pre-approved. So you'll hear people throw those terms around. They do mean different things. A pre-qualification today is as simple as you spent 3 to 5 minutes on, say, Ally or some other lender's website. You put in a small amount of personal information. We did what's called a soft credit pull. We then kind of assessed with technology your income and assets, and we kind of gave you the thumbs up based on the info you kind of told us that we think you're a candidate to buy a home, and we think you could kind of buy up to this price point. A pre-approval means that you went a step further. You gather all of your kind of income and asset documentation, W-2s, bank statements, tax returns, rental letters. You gave that to the lender. They did a full credit pull or a hard credit inquiry, which has an impact on your credit score potentially. They actually sent your loan to someone that is a professional reviewer of mortgage transactions. They looked at all your documentation together, and they were able to assess again that you look good on paper for the potential to buy a home, and they're able to give you a more refined and more certain figure of kind of what you should be thinking about in terms of price point and down payment options. I mentioned this in terms of patience and just what you should expect to provide. Getting a mortgage is a very paperwork intensive process. Even in 2023, as digital as the world is becoming, it does require a bit of organization, a bit of patience. So this is just meant to represent all of the things you could potentially expect to provide as part of your mortgage transaction. And I would encourage you, if you're thinking about buying a home soon, to try and start to gather all of this stuff as you're going through tax time or as you're doing kind of just general bill pay, upload it somewhere safe, try and organize it a little bit. And that way you have it at the ready as you kind of think about that pre-approval process. And it's just maybe reduces a little friction as you start to go out and shop and look for homes. And you've got a bunch of other things in your mind that you're thinking about and trying to juggle. And then kind of a quick recap here. So we talked about that financial assessment, kind of, looking at all the ways you're saving money or making money and kind of making sure those are accounted for, going through that pre-qualification process so that you kind of have a quick understanding of monthly payment, budget, what you would need to save in the way of down payment. You could go a step further if you were closer to the home buying process, do that pre-approval process just to get a little more certainty as you potentially are out looking at neighborhoods, hiring a real estate agent, touring homes, and then eventually, hopefully, making offer on the home that you want and winning that offer, and then kind of finishing your mortgage process, going through those final stages of the mortgage process, and then closing on the house. And I made that sound, really, really easy. And at times it can be easy, but I also want to stress that even for someone that does this for a living, buying and selling homes can add a little bit of stress to your life, and doing anything you can to kind of be pre-prepared just helps take a little bit of that friction out of the process, and would really encourage you guys to kind of do this research and go through this exercise if you think you want to own. There's so much good content out there now on just getting yourself educated about what's happening in real estate and housing and the mortgage process, whether it's on, shameless plug, ally.com or somewhere else. It's out there. And I think it's something that we didn't have 10, 20, 30 years ago. And it's really, really helpful just to kind of lessen the impact of going through the process.
Great. Thank you, Brandon. I really appreciate it. Let's move on today to our next panelist, Nelida Melchor. Nelida, if you can share with us an overview of your home buying experience.
Yeah, absolutely. Thank you, Tiffani, and to ALPFA for hosting this amazing live where we can all learn about key considerations and key components of the home buying process. And thank you, Brandon, for walking us through your slides. For me, I'm honored to share about my first time home buying experience because I know it's a very daunting process. And for someone like myself, being a first generation Mexican American and knowing the struggles my parents faced with their own home ownership experience, the idea of owning a home was just full of anxiety because of all of the unknowns, right? Some of my fears that I had when I was considering buying a home were around rates and whether or not I should lock in a rate now or play the waiting game. Another fear I had was around the value of the house and being worried about overpaying for a home. But fortunately for me, I had a great group of people around me that helped me feel comfortable about the entire process. First, I have to say I'm very thankful for the realtor that I worked with, who I met through my parents' church. And like Brandon said, find somebody that you know about or you're familiar with, someone they've worked with and can kind of vouch for them. And so through my parents' church, I was able to meet with this realtor, and it just so happened that she was also Latina. So I felt that she understood where my fears were coming from and made sure that I was well educated along the way. And she guided me to work with a lender who also made sure that I knew what I was signing up for, right? So between the both of them, they made sure that I took some online courses that were designed for first-time homeowners. Also working with a Latina, she was super resourceful and helpful because she knew the importance that family played into like my house hunting decisions, right? So my biggest help came from a family perspective was my twin brother, and the realtor knew that I relied on him just as much as I relied on her. And so she made sure that we all felt comfortable with the entire process. So in the end, my realtor made sure that I knew the difference between like the interest rates that I was signing up for. I made sure that I locked with a fixed rate instead of the variable rate, which is what I liked.
Very good. Thank you. What would you say is your most difficult or challenging part that you experienced?
Yeah, for me, well, first off, I know everyone's home buying experience is different, right? And even if you're buying a home for a second or third time, each of those instances will look different. But for me, the most challenging part was probably finding a home that met my criteria. I don't want to say I'm really picky, but I kind of am. And so I felt like I was starting to make the house hunting process just so much longer than it is just going through each home. But once I reset my mind and made a list of non-negotiables and also saw the house for what it was going to be, it was going to be my first home, right? A house that I will probably move out during the next step of my life. And I actually already moved out. But once I finally started seeing the house as like my first starter home, I started aligning my non-negotiables to that. So it made the process so much easier. Because I knew I didn't need the 5 bedrooms, I didn't need a super big yard because it was going to be my first home. So my non-negotiables became all about like my budget, also my commute to my family, friends, my work. And again, it just made the process so much easier.
Great. Were there any surprises or anything that you would go back and do differently knowing what you know now?
Yeah, for me, I was surprised about how quickly my fear about spending or overspending, so like taking out a huge loan on a home that might not be worth the amount that I paid for, that fear was relieved almost immediately. To me, I felt like there were steps along the way that made sure that that particular instance did not happen. The main part being the appraisal, right, which tells you how much your home is worth at that point in time, and also getting a copy of that report to make sure it's real. And also the mortgage lender requires an appraisal to help gauge the risk of making the loan, right, because they're also aiding or assisting you with that process. So because the lender wants to make sure that the loan isn't too big compared to the property's value. And so that's something that helped me kind of be more comfortable in that process. And something that I would do differently, and I know Brandon already mentioned it, is shop around for rates. Since it was my first time buying a home, I didn't really know like the difference between like the credit reporting and whether it'll be a soft pull or a hard pull. And I didn't want to take too many dings to my credit report or my credit score is what it is. And so I just went with the first person or the person that my realtor advised I should go with, which is fine. I ended up getting a pretty reasonable rate. But that's just something that I would do differently next time. Make sure that I do go to like online comparables, to make sure that I'm getting a decent rate. And now I even was able to refinance at a lower rate. So it's not the end of the world, right, if you get locked into a rate. And I think it's important to stress that right now with the high interest rate environment, just don't feel like you can't act right now because you can't find a rate that you like. There's always options to refinance later.
Great. So is there any advice that you would give for our audience members?
Yeah, the advice would be just feel encouraged and confident and do it. Find people that you trust and people that you feel comfortable around and people that you can learn from. Find people that you won't feel embarrassed to ask. I know I relied a lot on my family members, on the realtor, on other individuals. But also do your research. If there's something that you don't know, there's tons of information online. There's tons of courses that you can take. And so just be mindful and be resourceful about that. And then when it comes to actually picking your home, understand that not everything will be perfect. Homes can be modified over time, like painting and upgrading cabinets, but making a list of those non-negotiables, location, price, and stuff along those lines, and sticking to that will make the home buying process much more easier.
Great. Thank you, Nelida. I truly appreciate you sharing your experience with us. We will move forward and we will talk here with Alexis. So Alexis, thank you for joining. I understand that you've not yet purchased your first home and you're actively considering home ownership as a journey you look forward to in the future. Would you mind sharing with us an overview of your current home buying considerations?
Yes. So just to be sure, can everyone hear me at the moment?
Yes.
Can everyone? Okay, cool. So good afternoon to everyone on the call. Yeah, like you said, I do plan on buying a home this year. And as a first-time home buyer, there are some considerations that I have. And to list a few of those, price and interest rate. Mind you, I only know about interest rates from a financial perspective and not an actual practical real life perspective. So like I wouldn't be able to tell you what the average interest rate is to buy a home or what an ideal good looking interest rate would look like. So that is considerations that I'd have to look at. And beyond that, things such as location, what area do I want to live in, the square footage, how many rooms, and more importantly than anything, if there's like a Chick-fil-A within 5 miles of my home, that'd be very ideal. In the middle of the day, I just want to make a quick drive. So those are some few considerations I have.
Great. Definitely important for Chick-fil-A to be nearby. What is your biggest home buying fear?
I guess my biggest fear when it comes to home buying is that I get a bad deal or that I overpay on a house, or I might have selected or agreed to a bad interest rate. And this could definitely be something that's probably considering my home buying experience. So those are my biggest fears.
Great. What would you say motivates you as you're considering your first home?
My motivation to buy my first home, I started having equity in a property that I lived in. So the last year and a half, I've been living in a rental unit under a lease agreement, and just ideal if your living circumstances are temporary. But I plan on establishing a long-term place to live in with the next year. So that's my motivation
Alexis,
to buy my first home.
Alexis, we're having a little bit of trouble hearing you.
Okay.
Perhaps see if you can go off video. Yeah, see if you can go off video and let's see if we can hear you.
Okay. Can you hear me? How about now?
I think we can. Yep. Nope.
Can you hear me now?
Yes.
Okay, so it might be still lagging a bit. Feel free to just let me know again. I know several people right now that are looking to buy a house and rent other units while they are simultaneously building equity, and this is something that does interest me. So I would like to invest in a property so I can finally start building equity.
Perfect. And what about educational resources? Have you started exploring any, key education resources that you recommend, or if not, we can ask Brandon.
Yeah, so as any young Gen Zer, YouTube and Reddit are my best friends when it comes to any research I do. I often find myself Googling informational videos or typing out questions that arise to the mind, and I purposely put the phrase, explain it to me like I'm 5. So, but as far as any formal educational resources, I have not utilized any. But luckily, I work for a company such as Ally, who has resources like this presentation, for instance, or wonderful people nearby that are more than happy to answer any of my curious questions. But with that being said, Brandon, what are some resources that you would recommend yourself for someone like me?
Yeah, I did put a link out for the ALPFA team to share. There's a great course facilitated online through Fannie Mae, FANNIE space MAE. Fannie Mae is a government-sponsored entity that is kind of a big provider of kind of real estate finance liquidity behind the scenes to keep the mortgage market functioning at a normal rate. So they have a great home ownership course, sort of a bunch of different phases, kind of depending on where you are in your journey. If you just Google Fannie Mae home ownership course, you should see that as the first link that pops up.
Awesome. Thank you so much.
Great. Thank you, Alexis. I really appreciate you sharing your first-time home buying considerations with us. So we will move along quite timely here to our Q&A section. We wanted to make sure we gave you guys the opportunity to ask questions of Brandon, Nelida, Alexis, or myself. So if you have any, feel free to put those in the comment section and we will answer those. So I'll give you a couple minutes there to put in questions. Alexis, one question for you regarding your home buying journey and moving forward. What would you say needs to happen for you to get really comfortable with taking the plunge?
Yeah, I'm so glad you asked this question, and I'm more than happy to be transparent. So honestly, I am waiting for my lease to end in the fall, and it could end early if I pay 1 to 2 months worth of rent. But I'm so cheap to do that, so I'm going to wait for that to happen in the fall. But more than that, there is a possibility that house price and interest rates could possibly go down or moderate, like you said earlier. There's no rush necessarily at the moment, and I am indeed content with my current living situation.
Great, thank you. Nelida, another question for you. You mentioned a couple of your fears as you were giving your experience. How would you say those fears turned out? So after you went through the experience, do you feel like the fears came to fruition, or you were able to quell most of them throughout the journey?
I think I was able to kind of ease those fears throughout the journey. I know some things you just can't help it, like locking into a rate that you probably should have shopped around for. But I think now, like having gone through that process and learning more about how rates tend to move and everything's being cyclical, it makes me feel more comfortable the next go around. Now I'm tracking, I was able to refinance my home when rates were dropping super low, as Brandon shared in that graph back in 2020 through 2021. I was able to refinance and kind of get a better grasp of what rates are doing. And now that rates are on the rise, it's also important to just be mindful that things go up and down, cyclical, right? It's just being mindful of like what my current position is, right? And making sure that I do my research and shop around moving forward.
Great, thank you. Vivian has a question for us. She's thank you for having this live. I grew up in a very risk-averse home. Did either of you experience this? If not, what advice could either of you give?
Yeah, I can go ahead and take that. Hi, Viviana. Thank you for joining us. So risk-averse home, I think my parents are like the definition of like just being more financially savvy, right? Or cheap. So they didn't really like to just, go ahead or, head first into something new. And so they would always like either rely a lot on our other family members to kind of learn more about like what's going on and so on. And so I kind of inherited some of that, just making sure that I just stay well under my budget, making sure that I didn't purchase a home that I couldn't afford or be house poor, as some like to call it. But just make sure that I can still manage paying my mortgages or my mortgage, and also being able to save for any unexpended cost. As Brandon mentioned in the presentation, buying a home comes with a lot of other expenses. It's not just upkeep about mowing your lawn and everything. It's also making sure you save enough for when the boiler shuts down or when you need to replace the roof or something. It's just making sure that you stay well within my budget. And I think that's just key in any risk averse situation, is just managing a budget and making sure that you know where your numbers are landing every month.
Great. Thank you. We do have another question, Brendan. We have a question asking, let's see, should the down payment be in a high yield savings account?
Yeah, good question. The answer is no. As long as you're able to document with, typically 2 months of bank statements, you can have it in a checking account. It could be in a normal savings account. It could be in a high yield. Some people even liquidate stocks and bonds in order to, make a down payment, as long as you can kind of show, money leaving the market, if you will, in that transaction all the way to kind of getting the deposit into your banking account. That's fine as well. So yeah, there's definitely flexibility on where the money can be documented from as you think about the down payment.
Great. Thank you, Brandon. All right. So let's see. So our next question, apologies for hopping on here, but any late recommendations for, and I apologize, is it DACA recipient? Also, can a recipient apply for NACHA? Any one of our participants who can answer that question?
Yeah, thanks, Marco. I am familiar with NACA. Ally does not currently partner with NACA. I know there's a number of financial institutions that do, but I probably can't answer that beyond I'm familiar with it, but not something that I could speak eloquently on, if you will. Sorry about that.
All right. Any other questions from those that are on? So, Brandon, you mentioned earlier on the difference between the pre-qual and the pre-approval. How long would you say once you get into that pre-approval space and you are pre-approved, does it take to get to closing in homeownership?
Yeah, a lot of people will get pre-approved, like the formal pre-approval that I mentioned, well before they're even out looking at homes. So some of it will depend on kind of where you are in your timeline. But typically, once you've gone through the pre-approval, if you're under contract to purchase a home, or get to contract quickly thereafter, you're probably looking at, on average, 30 to 45 days from kind of approval to closing. And some of that is just depending on what you and the seller agreed upon in terms of, requested close date. Your pre-approval is good for up to 90 days before the lender would ask you to kind of refresh maybe some of the documentation you provided. So you have some flexibility, even if you're not ready to make offers on kind of day one of pre-approval, to take a little bit of time and make sure you can find the right scenario that's the best fit for you.
Great. Thank you. So one of our viewers noted that taxes and homeowners insurance should be taken into consideration for monthly expenses, and that's absolutely correct. And oftentimes you look to escrow those, and escrowing includes including them in your monthly payment, so that when you're making one aggregate monthly payment, it includes your repayment towards your loan, as well as a portion of your taxes and insurance that is due on an annual basis. So good reminder. Thank you for that.
Yeah, Beatrice, thanks a lot for that. And I'd also say that by escrowing, you're also letting the lender take care of payment of those annually, which is just one or two less things that you, the homeowner, have to do. So you give them a monthly payment every month. They'll coordinate with the local tax office as well as your homeowner's insurance company directly to take the money you're paying them and pay those bills annually. And so just just a great way for us to, have one less thing to do that's important and it's really important you don't forget about.
Thank you. All right. Next question is, what is the best way to start looking for a house? Who to talk to, and any online information places?
Yeah, I would probably, Jose, encourage you if you think you're close to probably kind of go through that pre-qualification process somewhere first, just so you can understand a little bit about your potential budget and then what that would mean in terms of a monthly payment. And then from there, there's a million. I personally love Redfin in terms of like user interface and just like what I think is kind of easiest visually to maneuver in terms of looking for houses, or redfin.com. But you've got Zillow out there, Zillow.com, which is well known. And you've got Trulia.com, which is well known. And these places all have national coverage in terms of homes listed for sale with a lot of kind of pertinent information around what's happening in that specific area. So that's a great place to start. If you wanted to engage with a real estate agent, if you had someone that again, sort of Nelida's experience with someone you trusted and maybe was referred, they can put you on some automated, call it email campaigns, where if you give them parameters in terms of budget and location, they can automatically send you stuff that comes on the market, goes off the market, changes in price, just so you can kind of keep an idea of what's happening in the market.
Great, thank you. Next question. What information can be given about an FHA 203K loan?
Yeah, so that's a great question. An FHA 203K loan is a loan that allows you to borrow over the actual sales price of the home, with the assumption that you'll make improvements to the home that will then drive up the value of the home. So there's a formula that dictates kind of how much you can borrow, et cetera, but it is a way to get a loan that will also help you make some repairs to the home once you move in. On the 203K front, not everyone offers them. Ally does not offer them. So I would encourage you to really seek out a trusted lender that you can kind of get a feeling is really good at the 203K process, because they are complex, and you kind of want someone that can be your trusted guide throughout the process, especially as you're trying to work with contractors, et cetera. You'd also want to be thinking about someone that maybe on the contractor side also had been through the process and really could kind of, help ensure that you're fulfilling documentation requests and all the necessary paperwork that get it done.
Great, thank you. Another question. So you mentioned, Brandon, down payments as low as 3%. What product types do you see for those lower down payment options?
Yeah, so first of all, if you're a veteran, you can get what we call a VA, or a Veterans Affairs loan, which typically is a 0% down payment loan for our veteran community. Other lower down payment options, FHA, so not the 203K, but what we call the 203B, which has a minimum down payment of 3.5% of the sales price, could be a good option. And then there's also, I mentioned Fannie Mae. Fannie Mae has a product out there that's called the Home Ready product that allows a 3% down payment with some lower monthly mortgage insurance, that PMI thing that I mentioned when I was presenting. It's that program is meant to try and solve that affordability piece that we talked about, get folks into homes that they can't afford, but with down payments that are to kind of allow you to also save, honestly.
Yeah. Specifically, Marco has a question about USDA loans.
Yeah, so United States Department of Agriculture loans. Again, those are low. Those typically are lower down payment loans. And the big thing about a USDA loan, and there's a website, you can just Google USDA, and I think they actually have a portion of their website where you can search addresses. To be eligible for a USDA loan, you have to buy a home in a designated USDA rural area, and you can type addresses in on that portal that I mentioned online, and you can quickly find out whether that property would be eligible. Again, I'd stress Not every lender offers the USDA program, so seeking out a lender that you felt was adept at those loans, I think would be a good practice as well.
Great. Thank you. All right. And so as we end our program, I want to make sure I share with you guys, an opportunity for more educational content, specifically on home buying. You can visit us at ally.com/stories/home. This is a really great blog, if you will, that gives you an opportunity to, look into, different key aspects that you would want to consider during the home buying process. You can see here, top 5 questions to ask as a first-time home buyer, 10 creative ways to save for down payment, spacious or snug, how much home is right for you. So several articles similar to this you'll find online. So definitely join us there.
Hey, Tiff, I think at one point we had a question from Ruben around whether we could share this deck or not that we did not address. I personally don't have a problem sharing the deck, but maybe we can work with the ALPFA team after the fact to facilitate that.
Okay. Great. So we'll work to get that deck shared for you. All right. Well, I appreciate everyone's time today. Thank you so much. Thank you to our wonderful panelists, Brandon, Nelida, Alexis. Really appreciate you sharing your experience and wisdom with us.
Yeah, again, to everyone out there that we can't see, I appreciate the opportunity to be here. This is a topic that, we're all super passionate about, and I could talk about it for hours, honestly, but we appreciate a little slice of your day. And, anything we can do on the follow to answer any further questions, feel free to reach out via the ALPFA team and we'll figure it out. Awesome.
All right.
Thanks a lot.
You.
Take care. Have a great week.
Thank you.